Ladies and gentlemen, welcome to Asian Guy Analysis on 17th January 2026. Silver is making fast, sharp moves today, and the reason behind it matters more than the price itself. Silver has picked up serious momentum, pulling in attention from investors across the United States and global markets. This is not a social media-driven spike or rumor-fueled rush. The movement we are seeing is tied to deeper market forces that have been building quietly over time. In this video, we are breaking down what is happening in the silver market right now, why prices are reacting so aggressively, what analysts are saying behind the scenes, and what investors should realistically keep in mind going forward. This is a fact-driven market breakdown, not a promise of easy gains. Let's begin with where silver stands today. Silver is trading close to historic and multi-year high territory after a powerful rally earlier this year. Prices have been moving quickly in both directions, which signals high volatility. However, despite the swings, the broader trend has stayed elevated. Markets often behave this way when demand is strong and supply cannot easily adjust. One of the biggest forces behind silver's recent strength is growing investor demand, and this demand is coming from multiple directions at the same time. Over the past several weeks, investors have increased their exposure to silver through physical purchases, exchange-traded products, and futures markets. Analysts say this is not a sudden or emotional decision. It is a calculated response to how the broader financial environment is evolving. Many investors currently view silver as relatively undervalued when compared to gold. Gold has already experienced a long and powerful rally, pushing prices to elevated levels. Silver, historically, tends to follow gold's direction, but with larger price swings. Because of this, investors often see silver as a way to gain exposure to precious metals with greater upside potential, while accepting higher volatility. This volatility is not a downside for everyone. For short-term traders, silver's price movement creates opportunity. Fast moves allow traders to enter and exit positions more frequently. For long-term investors, volatility is seen as noise around a broader trend. Now, what matters more to them is whether the fundamental reasons for holding silver remain intact. Another important factor driving investor interest is the role silver plays as a hedge. Although inflation has cooled from its highest levels, long-term concerns have not disappeared. Many investors remain worried about purchasing power over time. Rising government debt, large fiscal deficits, and long-term economic stability continue to influence how investors allocate capital. Silver, like gold, has historically been used as a store of value during periods of uncertainty. While it does not provide income or yield, it offers something different. It offers protection against scenarios where paper assets lose real value. This perception alone is enough to keep steady demand in the market. Analysts note that even when inflation numbers improve, investor behavior does not always reverse immediately. Trust takes time to rebuild. As a result, some investors continue to hold precious metals as insurance rather than as a trade. Another reason silver is attracting attention is diversification. Many portfolios today are heavily exposed to equities, technology stocks, and financial assets that perform well when growth is strong and conditions are stable. Silver behaves differently. It often performs well when uncertainty rises, when confidence weakens, or when markets reassess risk. Because of this, investors use silver to balance exposure rather than to replace other assets. This mindset has become more common as markets experience sharper swings. Analysts also point out that silver benefits from being both a precious metal and an industrial metal. From an investor's perspective, this dual role adds flexibility. In periods of economic growth, industrial demand can support prices. In periods of stress or uncertainty, investment demand can step in. Few assets operate in both worlds at the same time. Another layer influencing investor demand is currency movement. When the value of major currencies fluctuates or weakens, interest in hard assets often increases. Silver, priced globally, becomes more attractive during such periods. Even small changes in currency expectations can shift investor behavior toward metals. Interest rate expectations also feed directly into this demand. Silver does not generate yield. Because of this, high interest rates can reduce its appeal. However, when investors believe that interest rates may stabilize or decline in the future, non-yielding assets become more competitive. Analysts say that changing expectations around future monetary policy have helped support silver demand in recent months. It is important to note that not all investors are entering silver for the same reason. Some are positioning defensively, others are seeking opportunity, some are hedging against risk, while others are trading momentum. This mix of motivations adds depth to the market but also increases volatility. When sentiment shifts, price reactions can be sharp. Analysts caution that investor-driven rallies can cool just as quickly if conditions change. If risk appetite improves significantly, or if alternative assets become more attractive, some capital could move away from silver. That is why analysts emphasize watching flows, not headlines. The key takeaway from the investor demand side is this: silver's strength is not coming from a single source. It is coming from a combination of valuation comparisons, inflation concerns, diversification needs, currency expectations, and shifting views on interest rates. Together, these factors create sustained interest even when prices fluctuate. Markets remember fear longer than they forget risk. This mindset explains why silver continues to attract attention even after strong moves. Investors are not just reacting to price, they are responding to uncertainty, positioning, and long-term concerns about stability. Understanding this investor behavior is critical because it sets the foundation for what happens next. In the next part, we look at how industrial demand and supply constraints add another layer of pressure to the silver market, and why that combination can amplify price movement even further. Now, let's focus on industrial demand, because this is where silver separates itself from most other precious metals. Silver is not only held by investors, it is deeply embedded in the global economy. It plays a critical role in manufacturing, technology, energy, and healthcare. This industrial side of silver creates a constant layer of demand that does not disappear, simply because markets become volatile. Silver is widely used in electronics due to its high conductivity. It is essential in circuit boards, smartphones, computers, and data centers. As digital infrastructure continues to expand, the need for silver remains steady. Analysts point out that even during economic slowdowns, demand for electronics does not collapse, it adjusts slowly. Another major source of demand comes from the clean energy sector. Silver is a key component in solar panels. As countries push toward renewable energy goals, solar capacity continues to grow. This growth translates directly into silver consumption. Analysts say this trend is structural, not temporary. Government policies, long-term energy targets, and corporate investment plans all support ongoing demand from this sector. Electric vehicles also contribute to silver demand. EVs use more silver than traditional vehicles due to their electrical systems, sensors, and battery management components. As electric vehicle adoption increases globally, silver usage rises alongside it. Even if growth slows in some regions, the overall trend remains upward. Medical and industrial applications add another layer. Silver is used in medical equipment, imaging technology, and antibacterial applications. In industrial settings, it is used in chemical production, water purification, and specialized manufacturing. These uses are not speculative. They are practical and ongoing. What makes this situation unique is that industrial demand is happening at the same time as strong investor demand. Both sides are competing for the same physical metal. When investment flows increase while industrial consumption remains steady or grows, pressure builds quickly. Analysts say this overlap is one of the key reasons silver prices can move sharply over short periods. Now let's talk about supply. Silver supply does not respond quickly to rising prices. Mining output takes time to increase. Opening new mines, expanding production, or improving recovery rates requires years, not months. Analysts note that silver production growth has been relatively limited, even as demand has increased. Many silver mines are also not pure silver mines. A significant portion of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. This means silver supply is often tied to the economics of those metals, not silver itself. Even if silver prices rise, production does not automatically increase unless it makes sense for the primary metal being mined. Inventories also matter. Analysts say that available above-ground silver inventories are not building rapidly. This does not mean shortages are imminent, but it does mean the market has less buffer. When demand increases unexpectedly, there is less excess supply to absorb the shock. This lack of flexibility increases price sensitivity. In markets with ample supply, demand changes are absorbed smoothly. In tighter markets, prices do the adjusting. This is why silver often experiences fast moves in both directions. Small changes in expectations can lead to large price reactions. Analysts caution that supply constraints do not guarantee higher prices forever. If industrial demand slows, or if mining output improves over time, pressure can ease. However, in the near to medium term, supply is not expected to respond quickly. The key takeaway from this section is clear. Silver sits at the intersection of investment demand and real-world industrial use. At the same time, supply remains slow to adjust. This combination creates a market that reacts quickly and sometimes aggressively to change. Understanding this balance helps explain why silver behaves differently from other metals, and why volatility is not an anomaly, but a natural outcome of how this market is structured. In the next part, we will look at how volatility, analyst expectations, and investor behavior come together, and what that means for anyone watching silver right now. Now, let's bring everything together by talking about volatility, analyst expectations, and what all of this realistically means for investors. Volatility is one of the defining characteristics of the silver market. Analysts consistently describe silver as a metal that rarely moves in a straight line. Sharp rallies are often followed by pullbacks, and periods of calm can suddenly give way to aggressive price swings. This behavior is not a flaw in the market, it is a feature of how silver trades. One reason volatility is so common is silver's dual role. Silver sits between two worlds. On one side, it is a precious metal influenced by investor sentiment, inflation expectations, and economic uncertainty. On the other side, it is an industrial metal tied to manufacturing, technology, and energy demand. When signals from these two sides move in different directions, price movement can become exaggerated. Global economic uncertainty adds another layer. Investors are closely monitoring economic data from the United States and other major economies. Indicators related to growth, employment, and consumer spending continue to send mixed signals. When confidence weakens, capital often shifts toward assets perceived as safer. Silver tends to benefit in these moments, but it also reacts quickly when sentiment improves. Interest rate expectations play a major role here. Because silver does not generate income, its attractiveness changes with expectations around interest rates. When rates are high and expected to remain high, silver faces competition from yield-producing assets. When investors believe rates may stabilize or decline, silver becomes more appealing. Analysts say shifting views on future monetary policy have been a significant driver of recent price moves. Now let's look at what analysts are saying about what comes next. Most analysts avoid making extreme forecasts. Instead, they describe silver's outlook as cautiously constructive. In the short term, continued volatility is widely expected. Prices may rise or fall depending on incoming economic data, currency movements, and changes in investor positioning. Short-term pullbacks are considered normal. After strong rallies, profit-taking often occurs. Traders who entered earlier may lock in gains, leading to temporary price declines. Analysts stress that these pullbacks do not automatically signal a trend reversal. More often, they reflect the market adjusting to new price levels. Longer-term views depend on fundamentals. Analysts say silver's medium to long-term direction will depend on whether industrial demand continues to grow, whether investor interest remains steady, and how global economic and geopolitical risks evolve. If these factors remain supportive, silver may stay well supported. If conditions change, prices could face pressure. What analysts consistently warn against is overconfidence. There is no guarantee that silver will continue moving higher. Markets rarely reward certainty. Professionals emphasize risk management, position sizing, and patience. Silver's volatility can amplify gains, but it can also magnify losses. So what does this mean for investors watching silver today? The most important takeaway is mindset. Investors who understand why silver moves tend to make better decisions than those who react emotionally. Fast price movement can create opportunity, but it also increases risk. Chasing sudden spikes often leads to poor outcomes. Analysts often recommend focusing on the bigger picture. Instead of reacting to daily price changes, they suggest paying attention to demand trends, supply dynamics, and macroeconomic signals. Pullbacks, if they occur, should be viewed as moments to reassess, not moments to panic. For short-term traders, volatility offers opportunity, but timing becomes critical. For long-term investors, silver remains an asset driven by both economic cycles and structural demand. Understanding which category you fall into matters. The final takeaway is simple. Silver is neither a guaranteed winner nor a market to ignore. It is a complex asset shaped by real forces. Volatility is part of the package. If this breakdown helped you better understand silver, make sure to like the video and subscribe to Asian Guy Analysis for calm, fact-based market insight. Stay focused on data, not noise. That discipline matters more than any single market move.